An IRA is an account that's never paid taxes. If you pull the money out and you put it in your bank account, it triggers a taxable event. Now, if you move the money into a self-directed IRA, you can now grab that money and then you can now buy a property with it. That money, now you go buy a property. Now you get a title, you now own the property. But then 3 years later, you're like, I want to get rid of this thing. So now you sell the property. The property's now gone for $500,000. It's now worth $1 million. Now that property, when you sell it and you go to the closing and you go to the table and you're now to sign the documents and you're about to close on the property, they're going to ask, okay, where do I write the check out to? The check has to be paid out to the owner of the property. The IRA is the owner of the property. So now the check is going to be made out to that IRA, and then the money's got to go back into the original IRA. You are allowed to rent. You are allowed to rent the property, but the income rental from the property has to go back into the IRA.
This is legit. It's ever verified. But there are a lot of complexities with this. So if you're going to do it, make sure you avoid the following. You don't want to render any services to the property, meaning you don't do any repairs or maintenance yourself. You also don't want to use your own dollars for repairs and maintenance. You have to use the funds inside of the IRA to do that. And you don't want to rent this property to any related parties. Doing any of these things would be a prohibited transaction, which would make the entire thing a taxable event for you, and you'd end up owing tons of penalties and interest.